But let's put the focus then on the aviation sector. The churn continues for the aviation space, with Jet Airways finally heading to the insolvency courts. Now, this marks the end of several months of failed negotiations between banks as well as prospective bidders. And with Jet set to remain grounded for the foreseeable future, it also throws up a lot of opportunities for the remaining airlines in the space. In fact, the most recent aviation data that has been released by the DGCA shows that domestic air passenger traffic rebounded in the month of May, following a dip that we had seen in April. In fact, traffic grew by about 2.96% if we look at it on a year-on-year basis. And in terms of market share, it looks like both Indigo as well as SpiceJet have gained from Jet Airways' demise. Well, let's bring in our aviation experts then to get a better sense of what the data implies. We have Santosh Hiridesai of SBI Capital joining in, as well as Mark Martin of Martin Consulting. Welcome to the show, gentlemen. And Santosh, let me start with you. You know, the data for May reflects the first full month that Jet Airways operations were suspended. What were your key takeaways from the numbers?
Well, in fact, we were looking at, some negative growth in the month of May as well, what the trends that we have seen in the month of April. But it's heartening to see that the market has been able to, refill the capacity that we have lost on Jet Airways. And SpiceJet and Indigo have been quick to get in that capacity in a big way. And I guess, yes, that's the result that we see, that the market has quickly turned positive in the month of May. And of course, it's a bit of some reversal that we have seen in the PLF as well. So we have seen airlines trying to fill up these seats better as well. As a result of which we have seen all of this leading to a quick reversal in the growth that we have seen in the month of May. Having said so, I think international, the trends will still await numbers, but we'll see that void of Jet Airways and the impact of that lingering for some time, because the large part of Jet Airways capacity was on the international side, which I guess will take a while for us to see normalcy retelling there. But yes, domestic has been a very quick one to see normalcy back into the system.
All right, definitely defying the expectations as far as May, aviation numbers go. Mark, let me come to you. You know, PLF has gone up across the board, and we've seen this overall traffic growth coming in air travel, in spite of the fears, like Santosh was pointing out, that, perhaps after Jet exits, we'll see fares surging, capacity will be constrained. What were the kind of takeaways that you had from the data coming out for the month of May?
Morning. Thanks for having me today on BTVI. I think what's important to understand that PLF, while it has been hovering between 68, 69, 71, 75, and 78, I think it is bound to be that average PLF will go up once the fleet is reduced. Our average break-even, again, typically on new aircraft is between 65 and 68 aircraft, allowing for clearly higher profitability. And that's where the yield logic comes in. Now, given where we are at the moment, it's very important that we replenish the negative fleet we have. And when I say replenish, we're looking at least 240 or 50 aircraft. But remember, replenishment is only to deal with the vacuum. Our growth requirement is another 100 additional aircraft.
In fact, Mark, if we talk about SpiceJet, because this is the airline that has been consistently clocking the highest PLF, what is the outlook for SpiceJet in terms of capacity addition? There's no real clarity coming in on the 737 MAX issue.
Well, SpiceJet has been first on the pecking order when it came to getting hold of Jet's fleet. So clearly, they've had the ability to deploy more aircraft from the market and capture more of the, more of what we have as part of what you call the flying public. But let's be very clear, the higher loads of what you see PLF will reduce once, hopefully, soon we see an additional influx of at least 250 to 300 aircraft, which we're hoping will happen in the next 12 to 18 months. And then I think that should be a balance for everybody. But let's also be very clear, increased PLF does not mean increased earnings for airlines, because the price of fuel is still the highest. We still have a 10% import duty imposed on fuel. We still have very high GST charges and rates for fuel for passenger services. So unless the government resolves these, only then we can look at healthy earnings for airlines. So let me make it very clear: increased and higher PLF does not mean higher is not equal to higher earnings for airlines.
All right, very interesting point there. In fact, Santosh, as much as SpiceJet has benefited from adding Jet's aircraft to their capacity, they first had to fill the deficit that was caused by the Boeing 737 MAX grounding. So, as a percentage, if we look at it, they've only gained about 1% market share ever since Jet has been grounded. And if we compare that to, the 4% gain that Indigo has seen in market share, what are the kind of opportunities that you see for SpiceJet going forward?
So I guess a lot of these inductions which SpiceJet has been able to do, the repossessed aircraft at Jet Airways, a large part of capacity has come towards mid of May and towards the later half of May, which means the benefits that will accrue to the airline will probably be more reflective in the numbers that we'll see in the months of, let's say, June and thereon. So while the growth rates continue to hover at about 23-25% for SpiceJet, I think the numbers will inch up further from here on, and the increase in market share trends will be more visible in the months to come. Having said that, I think some bit of clarity is also required on the resolutions for the MAX aircraft. Where I think the company is expecting all of this to be settled by sometime in August, and they should be able to fly them. But what we keep hearing and keep reading is that this might probably take some more time, and we expect that resolutions will not come before the quarter 3 of this fiscal, which is where we'll need more clarity to really get a sense of how the market shares will pan out, going ahead. But yes, clearly the benefit which SpiceJet should get will be probably visible in the numbers of June and in the subsequent months.
All right, Santosh, Indigo is now half the market. They'll continue to induct aircraft, and the biggest positive is that they have switched to the CFM engines now from Pratt & Whitney. How much of a sentiment positive is that? And, give us your pecking order then as far as at least the listed players are concerned. Will this help Indigo keeping their fleet consistent? Where would you place Indigo versus SpiceJet?
Well, the order thing which has come out in the Paris Air Show, clearly, I think one of the reasons which has resulted in the switch from Pratt & Whitney to the GE engines or the CFM engines powered by GE and Safran is largely primarily because of the technical glitches which the airline has seen in the past, which has actually resulted in a lot of delays in terms of deliveries or the groundings of these airplanes. Which has impacted their market share and also to a certain extent the cost structure as well. The dependence on the secondary market planes have gone up in the absence of these deliveries. So probably that has triggered this move. And CFM engines have seen, very little of such issues ever since they have been operating, because we've seen Air India and Vistara operate them in the Indian market without as many issues as what Pratt & Whitney has seen. So to that extent, I think, the certainty goes up for Indigo in terms of the ability to deploy CFM-powered engines. In terms of the pecking order, certainly, we still believe that, companies like Indigo and SpiceJet with, a little better cost structure and the balance sheet will always be constructive on those names. The stock prices, although have moved up fairly sharply after, Jet has withdrawn from the market. And we still see that there could be upsides, but the upsides now remain capped in the range of 15-20% at best in our view. A lot of positives are baked in. And while we see the stock prices move sharply, I think the fare levels have started normalizing, which will mean that the elevated pricing that we've seen probably for 2-3 months is going to be very short-lived, and will soon return to normalcy quarter 2 onwards in our view.
All right, that's very crucial. Pricing expecting to return to normal then from the second quarter of the year. Just a quick final question to you, Mark. Then Jet Airways headed to the NCLT. How do things play out from here? We're seeing once again that perhaps now with the kind of haircut that might be required of the lenders once Jet hits the insolvency courts, we'll see more bidders come to the table, perhaps more interest from other airline players as well, like SpiceJet. And also with Jet's slot reallocation now being extended beyond that June 30th deadline, who do you expect will benefit the most?
Well, I think haircut will be an understatement. It depends on who has the razor here. What will transparent the NCLT court is very clear. That is a recovery court, and they will recover whatever they can that's left of the airline. So let's not keep our hopes up on Jet finding a savior on a horse or a camel. I think more importantly, it's very important that we understand what part of Jet or what remaining of Jet is worth certain value, and if it has value, are there any takers to pick it up? in all likelihood, NCLT and Jet Airways might just be a very clear garage sale. On with respect to an overall outlook, I think even Indigo coming up on the CFM engine will take them at least 6 months to retrofit the new engine plus 35. So I don't think Indigo the problems will be solved. And as the gentleman mentioned before, it takes at least 12 months for an engine to stabilize an engine operating conditions. So let's not look at this as an ultimate solution. Yes, it's a step in the right direction for recovery, but all eyes are on where the industry leads because it's not looking very healthy at this stage. And I think we all know airports have a very negative earnings in the last 2 years.